evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay, and the markets are in the pink of health, as you can see. A seventh straight day of gains, and what a gain today. Any index you picked was up 1.5%. So clearly this rally looks like it's here to stay. Well, there are expiry related issues. This week is the week when the June contract comes to a close, so there will be some wild movements, but there is no taking away that there is a seminal shift in the mood of the market as well. Hi, Surabhi.
Hi, Lata. Yes, above 8,300. It's quite a way to start the week, perhaps. All right, let's start with the headlines on that note. Market starts the week with a bang, rising for the seventh straight day. Benchmark indices rise 1.5%, with the Nifty closing above 83.53. The Sensex puts on over 400 points.
Interest rate sensitive stocks lead the rally. The Bank Nifty ends 2.5% higher. Real estate stocks like HDIL and Orbit Corp surge between 8 and 12% on heavy volumes. But the best is Indiabulls Real Estate, which surged the most, 30%, after promoter Gehlot invests over 500 crore rupees in the company.
The mid-cap index moves in tandem, with frontline indices closing 1.5% higher. JP Group stocks, that's JP Power, JP Infra and JP Associates, surged between 6 and 12% on reports that Heidelberg Cement may buy one of JP Group's cement plants. The report was later denied.
All right, those are some of the headlines that dominated Mindspace, and here are the experts that we have lined up on the show for you. Bhuvnesh Singh of Barclays will join in with his take on the markets and on earnings. As part of our special series, The New Yorkers, we'll get you some global perspective from Bruce Koestridge of BlackRock. And on Corporate Radar, we have Rana Kapoor, founder and CEO, Yes Bank, to talk about the bank's recent boardroom battle, as well as how the Articles of Association will be amended to comply with the High Court's orders.
So all that coming your way in the next 25 odd minutes. But for the time being, let's tell you about the market action. Well, it was quite a day. The bulls have tightened their grip on Dalal Street. Anuj Singhal is now standing by with a complete wrap of the day's trading action. Anuj, bulls in absolute control?
Well, the bulls are back. The bulls are on a stampede and they're bullying the bears right now. Seventh day of gains is what we saw in today's trade. And it was a secular rally, actually. Yes, the banks led from the front, and that clearly stands out. But apart from that, the Sensex, Nifty, the mid-cap index, all gaining in similar amount. Monsoon progress, global cues in terms of what's happening in Greece, what's happening with the US Fed, all of this aiding sentiment. And really, it was a party out there for mid-caps in last hour of trade. The Bank Nifty had a fabulous day. The index itself was up 500 points, and across the board you saw banking stocks gain. In fact, let's talk about some of those banking names first, because that clearly was the toast of the town today. So stocks like Yes Bank, ICICI Bank, Axis Bank, all of them up about 3.5% or thereabouts. Not just that, even the next three top gainers were all banks. PNB, Bank of Baroda, Kotak Mahindra Bank were all gainers in today's trade. Some other Nifty gainers, again some financials there. HDFC, that was up about close to 3%. Infosys had an AGM today. That stock gained in last hour of trade, and that was up 3%. And Bosch, which has corrected quite significantly since its inclusion in the index, that was also up about 3% in today's trade. Some other heavyweights that participated in trade today included the two FMCG big ones, HUL and ITC, both up 2%, and Tata Motors as well, which was up about 1.5%. And finally, to the mid-cap space, and stock of the day today, and by a mile actually, was Indiabulls Real Estate. Promoters infusing money, hard cash into the company, and that was clearly playing out, up 30%, and that led to an overall revival in the real estate segment. So stocks like DLF, HDIL, Unitech, all of these were rallying. And apart from that, some other big mid-cap gainers included Karnataka Bank, GMR Infra, and Suzlon Energy. So clearly the expiry week has begun on a really strong note, and as of now, you'd have to believe that all the momentum is with the bulls in the near term.
Okay, Anuj, thanks so much for that. Yes, quite a move even in those mid-cap stocks that Anuj was talking about. On that note, let's get in our first market voice for the day. Bhuvnesh Singh, MD and Head of India Research at Barclays, expects the Nifty to touch 10,200 by the end of the year, driven by a recovery in earnings and a resumption in government spending.
Monetary policy, there is a further easing. Yes, we would take it very positively. But do we expect that to happen? We think that Governor Rajan is a bit more conservative. Our view on India still remains very constructive. Our Nifty target 12 months out is 10,200. We think as the earnings traction start coming in, more likely over the next 6 to 9 months, Nifty would move ahead and the valuations would be significantly more compared to where the numbers are today. Monetary policy, there is a further easing. Yes, we would take it very positively. But do we expect that to happen? We think that Governor Rajan is a bit more conservative. Our view on India still remains very constructive. Our Nifty target 12 months out is 10,200. We think as the earnings traction start coming in, more likely over the next 6 to 9 months, Nifty would move ahead and the valuations would be significantly more compared to where the numbers are today.
Okay, that's Barclays on the market. 10,200 is their call and significantly stronger than some of the, in fact, downward revisions on the Sensex and the Nifty that we've heard of in recent times. But banks really taking this market higher from the front, Lata, and this big move that we've seen, PSU and private sector. What did you think of it?
Oh, yes, 2.5% gain. So, by any standards, the hands-down winner today. Banks had something going for them. It wasn't just the big boys in the bank Nifty, which is ICICI, Axis, HDFC Bank. But we saw even the PNBs and the Barodas and SBI and a whole host of banks. I mean, you pick Indian Bank, Union Bank, all of them were rising about 5-6% today. So it was across the board. There are a couple of things going for the banks. One is that this Greek resolution issue has led to a bit of a worry that, you can't have short positions. If global equity markets heave a sigh of relief and recover, then short positions in India anywhere would be dangerous. And most of the short positions were in the banking space, especially in the PSU banking space. So the covering got, going in the PSU banking space. You saw that index rise rather sharply. The other big point going for the banking space is the manner in which the reins have changed the entire outlook on inflation, on rural distress, and on the interest rate front. Now, if indeed the reins, keep food inflation at bay, then the space opens up for more rate cuts, and that means, the bond portfolio starts looking good as well. There will be more, ability to relieve money from distressed assets. Hopefully, there won't be rural distress. Hopefully, sales will pick up. So you won't have so much of NPLs. There was another big point of recovery for the banking stocks. But the biggest of them all is an engineered breakthrough in bond prices, which was because of talk from the finance ministry that the Reserve Bank is open to allowing a little more FII buying into government bonds. Actually, they're converting a dollar limit into a rupee limit. That will mean that a little more, some 30,000 crores more of bond buying can happen. If that actually happens, then bond prices will, take to the wings. They already have gained about a rupee or more since this talk began on Friday afternoon. And more expensive government bonds means mark-to-market gains for the banks. Also a stronger rupee, which would mean that a cheaper dollar, a lot of banks' clients have dollar debt. So when the dollar goes down, that also means some stress relief for the banks on that quarter as well. For all these reasons, you saw Bank Nifty going to the taking to the wings. But my sense is it was primarily short covering. You just had the entire market turning one side, and therefore I'm not very sure how much legs this rally has. But clearly, up until expiry, you cannot call an end to this rally. You have to watch out for the Bank Nifty.
Okay, absolutely. I guess the proof of the pudding will actually take place after Thursday. That's when the expiry moves are over. But on that note, let's actually hear out some experts on what they make of the banking sector in the road ahead.
Market had run down significantly, and so a pickup was always on the cards. We've always maintained that the equity market's downside scenario in terms of losses on banks was probably always been somewhat far-fetched. There is adequate resilience in terms of our LGD estimates for banks. But what does surprise me is I don't think this is the time for exuberance, because the pile of distressed assets that banks have is not going to go away in a hurry. Corporates will take a while to delever, and so credit costs will remain elevated for banks.
Definitely the improving outlook on inflation because of the monsoon, and once again expectations of rates moving downwards. All said and done, the economy does seem to be moving on a stronger footing on the macro front, and that is going to benefit banks. So from the sector perspective, overall things are improving. Of course, within the sector, who will benefit or not, I think that skew will continue to be in favor of private banks. But I think the macro is looking positive for banks. in general, what we've seen over the last few days or weeks.
Okay. Let's turn to another story with the Bombay High Court ordering the Yes Bank management to amend its Articles of Association. The present board has little choice but to adhere to that court's order, which is of course a welcome order for the board. The bank's founder and CEO Rana Kapoor told CNBC TV18 that the board will be meeting by the end of July to implement these changes to the Articles of Association. Let's hear him out.
We have a board meeting towards the end of July, and this will be discussed, and I assume that within this fiscal year, we should take it forward, naturally with some direction from the Honorable Court. If there is activism, unfortunately, and lack of respect for the bank's directors and its CEO's office and whole-time directors, then that is not in the interest of the bank. This is a holistic institution. That's all I ask Madhu Kapoor and family. Respect the institution.
All right. From the real estate space now, Indiabulls real estate shot up nearly 28% today on the back of news that company promoter Sameer Gehlot will be investing 538 crore rupees in the company through the preferential allotment route and an allotment of warrants. Nimesh Shah joins us with all the details. Nimesh, that's serious money coming in from Sameer Gehlot. Tell us more.
Oh yes, the promoter infusion of 540 crore was clearly a shot in the arm for the Indiabulls real estate stock in trade today. In fact, there was huge volumes in the stock, with the stock rallying good 27-28% in trade today. So clearly, promoters are increasing the stake in the company by a combination of equity shares as well as warrants. Post this infusion, the promoter holding will go up from 27% to 37%. In fact, Macquarie had a note this morning on Indiabulls real estate. They believe that the stock will see a relief rally on the back of capital infusion by the promoters, which was at a hefty premium of good 60% to Friday's closing price. But in going forward for FY16, the key trigger to watch would be how much the company can reduce the debt and what kind of sales they do in two of the key projects, one in Mumbai and one in Gurgaon. Remember, the company is currently sitting on a debt of close to 5,500 crores. With this capital infusion, Macquarie believes that the first 5% reduction in debt will happen with issuance of equity, and possibly in the near future with conversion of warrants, another 5% debt can be shoved off from the Indiabulls real estate balance sheet. But clearly, while today's infusion of capital by the promoter was a shot in the arm, for FY16, the key to watch would be how much further the company can reduce the debt and how much sales they can do in FY16 in two of the key projects, one in Mumbai and one in Gurgaon. Back to you.
Okay, Nimesh, thanks so much for that. 30%. What a move on that stock today. Well, speaking of stocks on the up move, both Heidelberg Cement and JP Associates were up nearly 5 to 6% in trade today on the back of news that Heidelberg is in talks with JP Associates to buy one of their 1 million ton per annum units. This is in Sikandrabad in Uttar Pradesh. Nigel D'Souza is joining in with the details. Nigel, there was some confusion on whether this report is correct or not, but the stocks are moving higher. What did you pick up?
Well, JP Associates as well as Heidelberg Cement, both of them were fairly active in today's trading session on the back of reports that suggested that Heidelberg Cement is looking to buy one of JP Associates' plants. In the last couple of years, we have seen JP Associates has sold close to around 13 million tons of their total cement capacity, and now currently they're sitting with a capacity of only around 23 million tons approximately. JP Associates, it's clear for them, they're looking to sell some of their cement units and in fact bring down their debt. For this time around, the reports are indicating that they're looking to sell their Sikandrabad unit. Remember, that's only a grinding unit, so that there will not be any clinker unit that will come with it. The total capacity of this particular unit is around 1 million tons, and as per reports, they're indicating the total deal could be at around 500 crores. For Heidelberg Cement, meanwhile, they have a capacity of around 5.4 million tons. It is primarily in the central part of the country, and they have a debt of around 970 crores. Why will Heidelberg be interested in this particular unit? It could be because of their limestone reserves and also because it gives them some kind of entry into the Western Belt as well as to the Delhi region. So that may be the logic of this particular acquisition. It'll be interesting to see how exactly they fund this transaction because they're already sitting with a debt of close to around 1,000 crores. In terms of what the companies told the exchanges in their clarification, Heidelberg Cement said they've not received any such proposal, while JP Associates said, as always, they're not going to be commenting on any market speculation.
Yes, that's the important point. Heidelberg saying that they have not received any letter asking them to buy any cement plant. So that's where the report stands, and that's where the prices stand, more importantly. Well, the one stock that was in focus throughout the day was that of Tata Steel. This after the steel major made some headway with its UK workers' unions on the pension scheme over the weekend. Kritika Saxena has the details.
Well, we had already reported that Tata Steel had submitted revised changes to the pension plan, and of course we had also reported that the strike had been called off. Now, over the weekend, a senior delegate of the UK trade unions had considered all the changes and accepted them. Now, the way forward, and what I'm picking up from my sources, is that there will be a large-scale poll that will take place, another large-scale poll rather. Now, that poll will essentially comprise of all the members of the four UK trade unions and will take into consideration all the points in the proposed changes that Tata Steel has put in. This largely refers to the pensionable age, which Tata Steel had earlier referred to as 65 and had, after the issue with the labour unions, finally changed it to 62. This is not official. This is what we are picking up from our sources. Couple of other points that will be considered in that poll, but what we understand is that they are looking at rushing this in the next 2 to 3 days. This will finally go through, and if majority of the members in the trade union say yes, we will see the pension plan being accepted, and then eventually being put into place, thereby ending Tata Steel labour wars. Of course, in fact, over the last 1 odd month, things have been very difficult in terms of operations at Tata Steel, and this will mean that Tata Steel can finally go back to day-to-day functioning, given the fact that Europe, of course, contributes to 60%. This is a significant and pretty much why Tata Steel's stock was shining today.
Okay, all right, Kritika, thanks for that. On that note, we'll take a quick break, but coming up on the other side, Sudarshan Sukhani will be joining in for a technical chat. We'll also tell you about the stocks that were in news today.